Hello, can you guys hear? Okay. Lester, can you hear me? Okay, cool. Hey, later if you want to take over, you let me know. Then you can show them if there's any live example of live trades. All right. So I guess everyone will be in. Okay. Again, I think this session last session I forgot to record. All right. So this session we'll be recording it. In case those who miss it. Okay, so let me walk you through again some of the basic things that we'll do every week. You should have received this report, all right? So the first thing you will look at is the fundamental strength index. You can see which, from this table, you can quickly see which currency based on the economic data is strong and which currency is weak. All right, so over here for this week, our focus will be more on weakness from Aussie. All right, and riding on the strength on US dollar as well as continued weakness on pound itself. Okay, so this one is a quick glance as to showing you which economy is expanding and which economy is contracting. And then if you look into COT first, all right, this one is actually a very quick idea as to, in terms of net positions, how the change from previous week to this week. So you can see euro and pound position both overall net short has increased, all right, meaning traders are actually adding on to their short positions. That's why we are also continue very bearish on euro as well as pound. All right, and if you look at Aussie, Kiwi, and Canadian, they actually increase in terms of positive position. So it means it's showing that. Okay, let me just close my chat first. Okay, what is showing over here is what we are seeing is there's additional long positions adding in for Aussie, Kiwi, and Canadian. All right, but if you look into the fundamental data, all right, let me just scroll up. You can see Aussie is currently still contracting. Kiwi is slightly in terms of positive side, all right, and CAD as well. All right, but we need to be very careful because this week itself, if you look at the key risk events, Aussie itself, we have a CPI which is releasing on Wednesday. Okay, so this CPI is very important because this will be the last data coming in from Aussie to determine whether RBA will cut rate on the 2nd of August. Okay, if this CPI is negative, meaning it's less than the estimate, high chance RBA will cut rate. Okay, and when RBA cut rate, there's also a potential that RBNZ, which is New Zealand, will follow suit. All right, so that's why over here, even though COT index is showing that Aussie is still adding on in terms of long position, we want to be very cautious. All right, so if you look at the summary, all right, the overall directional bias for each of these currency, Euro and pound are very clear that we are still bearish on it. Both fundamental and sentiment is showing the same direction. All right, pound itself, any upside potential is actually going to be better selling opportunities. So we are not looking to buy pound at any point of time. All right, right now we are still looking to sell it. Pound, yen itself, this coming Friday we have BOJ monetary policy statement. All right, so high chance is BOJ we're gonna stimulate the economy. So either doing more QE or even cut rates further. Okay, but we never know what BOJ will do. So the part here is if we stick towards the fundamental and sentiment aspect, we are still seeing bearishness on Japanese yen. All right, but if BOJ decided that not to do much this Friday, they will disappoint the market and yen will rally after that. All right, so the chance if you look at the signals setup that we shared with you this week, there's not a lot of yen. In fact, there's only one, which is Canadian yen. Right, so we are actually avoiding yen pairs as of now. But for those who would like to trade the BOJ news release, you can do so on the Friday, right? Dollar itself, we are pretty bullish on it because the recent data is pretty positive, and this add on to the probability that Yellen might still have another rate hike in 2016. All right, so this one is very, I would say we are not sure as to whether they will go for it because of election at the end of the year. Okay, but definitely overall in terms of the 8 major currencies, dollar is more towards the bull side. So if you want to short any currencies, high chance is you want to couple it with dollar, all right? Because if you look at this overall index, the only one that is pretty strong is actually on dollar and Canadian. All right, so when you want to short certain currencies, you might want to pair up to dollar itself. Aussie, we are slightly bearish because of the fundamental, and we are looking at this week is on Wednesday, the CPI data. Okay, but I said here that COT, however, is showing sign of strength. This is still because it's on risk-on environment, all right? So we might still see people, as in traders, piling on to long position. But if it's a negative data coming in on Wednesday, then it might just switch like this. That means people might close their long position, and this might add on to a bearish momentum for Aussie. So you need to keep note on Wednesday itself. Kiwi for this week itself, you look at this Kiwis event, there's not much news. In fact, there's no high impact news itself. So the thing is, this pair itself will follow pretty tightly with Aussie. So if there's a weakness coming from Aussie or even China, Kiwi itself might be affected as well. All right, so we write here that very similar to Aussie, RBNZ is also considered another potential rate cut. And the only thing that's not aligned is that fundamental seems to be rather positive. Okay, but RBNZ made it very clear that they do not want a very strong New Zealand dollar, right? So if New Zealand dollar continue to rally, they might take certain action, right? Either using language tone from the central bank, or even really taking a decision to cut rate itself. CAD is bullish simply because the recent BOC report is pretty optimistic in terms of the outlook of Canadian. And we couple in with COT is also showing signs of strength, right? The only concern over here for CAD is oil prices is still falling, all right? Later, I'll bring you on to the oil prices chart as well. The only concern here is falling oil prices for Canadian because fundamental is good. COT is showing sign of strength. The only concern is really on oil prices. All right, so with this in mind, I'll bring you over to the chart. Okay, the first one, of course, is Aussie. This is oil market. All right, let me bring it to the most common pair, which is on euro dollar. Okay, if I look at the H4 time frame, overall it's still in this very tight range. Okay, but recently it has broke the very major psychological level of 1.1. All right, so currently it's just trading 20 pips below that level. But 1.1 is a key psychological level that broke on Friday itself. Okay, so as long as price remain below 1.1, you can high chances that it'll be continue going lower. All right, but we don't enter our trades just based on prices like this, but we also follow very tight technical analysis. All right, so this is a potential sharp pattern. Okay, and our key level of interest is only when price retraces back to 1.114. Okay, it's about 100 plus 150 pips away from where it is right now. The chance of it going up higher might not be there. All right, but again, we follow very tight technical analysis rule as well, so we don't just enter anyhow. Okay, so this is how we trade. Again, all right, you need to follow your trading plan, all right? So if you have your own technical analysis, you might follow your own technical analysis for entry setups. Okay, but overall, this pair, we are still looking for potential downside. Even if you go on daily time frame, you can see the room for it to fall is still pretty much, there's still much room for you to actually exploit towards the downside. Okay, so this is for euro dollar. Okay, so for sharp pattern, how we do it is we take from X to A. Okay, very basic, right? You take from X to A, and this C point must have an extension of 113. Okay, so if I pull back from A to X point, you can see my extension level. All right, price comes in an extension of 113. So this is the C point for sharp pattern. And to complete, all right, to enter, we use the X to A, a retracement of 886. Okay, so technically sharp completion level is pretty much pretty wide. It's actually from 886 all the way to 113. Okay, but we are entering at 886 because sometimes price will come at 886 and then just reject off it. All right, so we are pretty aggressive in this pattern simply because we are aligning together with fundamental and sentiment. Okay, so basically we are already pretty confident in the direction in which it's going. So we are just simply entering at the 88.6, right? Coupled with some major support term resistance. Okay, so this is for euro dollar. If you look at pound dollar, we have also another pattern. This one is a bat pattern. Okay, it's not the most ideal looking kind of bat pattern, but basically when you pull from X to A, let me go higher time frame first. All right, walk you through. What pound is currently doing is ranging in this very wide range, right? Ranging from 1.3 around 1.35 at the high, and the lowest point is about 1.29. Okay, so it's a pretty wide range. All right, and basically what price is doing over here is still waiting for any a major decision from the BOE, right? Whether they're going to cut interest rate and do QE, and this decision will be released and confirmed on the 4th of August. Okay, so another date that you want to pay attention to. All right, 4th of August is where the BOE is going to meet. So depending on what they're going to do, all right, whether they're going to QE or cut interest rate. But from our side, we believe that high chance that BOE will actually at least do a QE. All right, whether they cut rate, we are not sure, but at least we believe that they're going to do a quantitative easing, and that will cause bearish momentum on pound. Okay, and what's best is you couple pound with another strong currency, which is dollar. The overall direction should be pretty clear cut towards the downside. Okay, so where we are going to enter is we want to wait for price to actually rally back up, all right, or retrace back up to the 1.3343 level, all right. And if I go to higher time frame, it's actually pretty near to the top of the range. Okay, so we want to enter only if price retrace back up. Currently, it's still trading below it. It's about 300 pips away. The chance of it going up might not be there, but for those traders who are more aggressive, you can trade the breakout of this low. All right, this low is 1.306. You can trade the breakout. Basically, you know, if price continue falling and it breaks below this low, you can enter on the sell stop order. All right, why is because we are looking at price currently ranging very tightly in this. Okay, if it breaks below this, high chance it can reach towards at least the previous low over here at 1.2845. Okay, for traders who want to trade the breakout, look out for this level at 1.306. Okay, but we don't actively trade the breakout unless there's a very strong news catalyst. Then we only trade it. All right, so usual time we don't trade those breakout. Okay, so what we are doing is on pound, we are just simply waiting at this level of 1.343. Okay, yen pairs are basically currently a lot of them are in, I would say, in limbo state. All right, it's in no man's land. All right, and basically we're waiting for Friday's BOJ decision. So when such things are still waiting to be released, high chance is market will be very uncertain. So the movement of it wouldn't be very certain, and we never know what Kuroda will actually decide to do. So best thing to do when you're uncertain is actually just to avoid, all right, the currency pair itself, because there are many other currency pairs that has more, I would say, a clearer kind of direction that you can take. All right, so capital preservation always comes first. So if you're uncertain of the direction of which the currency pair will go, just skip it, avoid it, look for a better kind of opportunity. All right, Aussie dollar also, what we are seeing over here is we do have a slight divergence. All right, price prints a higher high over here. Our RSI prints a lower high. Okay, so if I draw it in, this is your divergence. Okay, and when you have this kind of divergence, what we are waiting for is a retracement back to the 61.8 Fibonacci level, and then look for a short opportunity. Right, so we are basically waiting for price to come up, hit that 61.8 retracement level where we short, and expect it to move further lower. All right, again, Aussie, we are bearish on it, but you need to wait for the CPI to release on Wednesday. Okay, if CPI release positive, Aussie might continue rally higher. All right. So if CPI is positive, you might not want to short the Aussie anymore. But if it comes out negative, high chance it's not going to go that high, right? So the thing is, you might want to trade the breakout, right? We might trade the breakout, but we will put in our breakout orders as of today, but we'll put it closer to the release of the news itself. Actually coming out on Wednesday morning, so we might key in, prior to the news, maybe an hour or even less, half an hour before the news itself. We might key in a sell stop, right, at the low, at the lowest low over here. Right, and if CPI is negative, we do expect it to break lower and then continue in that direction. Okay, so you can trade a breakout, but don't put in your pending orders as of now. We'll be putting it in on Wednesday morning before the news itself. Okay, so that's how we're going to trade the Aussie dollar for this Wednesday CPI data. For Kiwi dollar, this is on H1. So if I go on to H4, you can see very similar setup. All right, we have a divergence over here. Price prints a higher high, but the RSI is previously overbought, all right, and then it prints a lower high. So we have a divergence happening, right? Again, if it's a divergence, what we do is we use Fibonacci tool, pulling from our high point to the recent low, and we are waiting for 61.8 retracement. All right, so if you look at price where it is currently, it's about trading. It's trading around 0.7. All right, it's about 180 pips above. So chances of it going up might not be very high, especially if CPI in Aussie for Wednesday is negative. It might break to the low side as well. All right, but if you go down to smaller time frame, okay, we do have a bearish cipher pattern happening on the H1 time frame. Okay, so the cipher pattern it completes around the 78.6. Okay, if you go back to a higher time frame, you don't have much kind of structural in the past, but trading this is purely based on advanced pattern setup, a cipher pattern setup, coupled with the fundamental itself. All right, again to remind you, Kiwi for this week, all right, there's not much news, so the driver will really depend on Aussie. Okay, so if there's a weakness in Aussie, high chance the weakness will also be translated onto the Kiwi pair itself. Okay, so that's the reason, the main reason why we are looking at Kiwi. All right, so keep in mind that best is, if you want to filter off pair depending on deciding whether you want to trade Aussie or trade Kiwi, best is to trade Aussie directly instead of Kiwi. Okay, dollar CAD itself is trending pretty much higher up, but if you look at higher time frame, what's happening over here is actually forming a very nice ascending triangle. Okay, currently it is testing and is already breaking the top resistance, but we never know what will happen yet, all right, because it can pull back just like this. But this strength coming from dollar CAD is mainly coming from dollar itself and the weakness of Canadian. All right, weakness of Canadian is because of oil prices, right? So later on we'll go to the oil chart and you can see that oil is still in a very down bullish momentum as of now. Okay, so this one there's not much of a setup because dollar is strength, Canadian is strength. Best is not to touch pairs like this that is not clear in the direction that it wants to go. Most of the yen pairs, if you look at it, all right, what I say is in limbo state is, currently it's just consolidating. It might break up, it might break down, we never know. But how you want to trade it is then trade the breakout strategy on Friday. Okay, when BOJ made that announcement, you can trade the breakout strategy. If you want to trade breakout strategy on yen, I would say best is to trade the breakout to the short side. Because if you couple any of the other currencies like Euro yen, Pound yen, Aussie yen, Kiwi yen, if you want to trade to the breakout to the upside, most of this currency is not strong. Okay, so if you want to trade out to the breakout to the upside, look at dollar yen. All right, look at these 2 points, the high and the low. All right, so if you want to trade the breakout to the upside, trade on dollar yen. If you want to trade the breakout to the downside, you can actually choose euro or even pound. All right, meaning if price breaks below this low, which is then that's where you enter. All right, but again, the breakout strategy, you don't enter your trades right now. You only enter when it's closer to the date. So for Friday, before BOJ, you can actually enter, in the breakout pending stops during the Friday morning before the BOJ made this statement. Okay, Aussie and Kiwi again, best is to avoid them. All right, because it's not clear. All right, Kiwi is, you know, today best this week itself. Sorry, best is not to trade Kiwi itself. Okay, Canadian over here we have divergence set up. This forms a lower low. All right, RSI prints a higher low. Then price broke above the neckline over here. So what we are waiting for currently is for a retracement back to 61.8 level. All right, so we are waiting for this. The key here for this pair is you need to watch out for Friday, because if BOJ decide not to do anything, not to stimulate, not to print money, Japanese yen might just strengthen because of deviation from the expectation of what BOJ will do. All right, so it might strengthen. So you need to keep an eye on it if you are trading on Canadian yen. Right, the others, Euro, Kiwi, Euro, Odd, again, because of fundamental, best is not to touch this because Euro is weak, Aussie is weak. Again, you don't want to trade any pair which is not clear in direction. Okay, similar for Pound Aussie and Pound Kiwi. All right, but OddCat, what we have over here is another cipher pattern. All right, if you go at higher time frame, you can see previously it's in an uptrend. Currently, it's forming. It seems like a start of a new downtrend, right? And if you understand the cipher pattern formation is usually cipher pattern form at the beginning of a new trend, right? So I'm not saying that definitely this cipher pattern is gonna be a winning trade, okay? But usually cipher pattern form at the beginning of a new trend, right? So previously it's an uptrend, right now it's going down. So high chance it's gonna form a new downtrend. And we are only looking to enter if price comes up towards this level, around the 0.9920 level. All right. Right now, from where price is to there is about 60 pip. All right. High chance is we would like it to actually hit it before the CPI during Wednesday is up. All right. High chance is we would like it to hit before the Aussie CPI comes out. Okay, and hopefully by the expectation of the Aussie CPI on Wednesday is going to be negative, and then we run this trade profitably. Pound franc, we do have an advanced pattern setting up as well. This is a Gartley pattern. If you look at H4, right, this entry of the pattern itself is also very close to the previous high. All right, previous high of the range, so it's not too bad because we do have some very nice structure resistance over here as well. All right, so this one we are targeting to enter at the 1.316. Okay, right now it's at 1.294, so it's still about 200 plus pip above from it. So we will just wait patiently for price to, you know, eventually whether it hits our entry price or not, it's not important. But as long as you follow your trade plan. Okay, if you look at gold, all right, I think John is trading actively on gold as well. Higher time frame wise, you can see previously we have a bad pattern. All right, we enter it barely hit our TP1. So what I share with John is, you know, protect your capital, move your stop loss to break even. At least the worst case scenario happen is that you won't lose any capital, right? You just get out at break even. But what we are looking at right now is we have a bearish butterfly pattern, and you know, price is currently over here is still inching lower and lower. So we don't have any fundamental data for dollar. For gold itself, for the commodities. So we are purely trading this on a technical basis, right? And if I'm trading it basically on the technical analysis aspect, we do have signs of it moving further lower as of now, right? Because we do have a double top over here, coupled with RSI divergence, all right? So if I draw it in, this one forms a double top, but your RSI prints a lower high. So there's a divergence. It signifies that the trend, the uptrend itself seems to have reversed. All right, and so if we are trading the technical wise, overall, if it's moving down, we want to look for opportunity to sell into it. All right, that's why I actually identify this bearish butterfly. Right, so this bearish butterfly completes around the 1345.8. That's still quite a bit up. All right, current price is trading at 1316. All right, so that's about $30 above it. So just wait for it. All right, again, follow your trade plan, be patient on it. Okay, similar to gold, we have silver. Silver is slightly different because right now, instead of a downtrend, we're actually in a range. And what we identified over here is we have a potential bearish bad pattern. Okay, if price rally back all the way up to this level, we'll look for a short opportunity. Higher time frame wise, this is pretty much at the high of the range. Okay, so it's not too bad a technical setup. Looking for it to hit the top of the range and then it retraces back down and then we just take profit and exit from it. Okay, silver and gold is basically in a very in a range environment. We don't have fundamental data on it, so we are purely trading on technical for the commodities. Okay, US oil on higher time frame, you can see is moving down. That's why it's still contributing to the weakness of Canadian, right? Because Canadian and oil is very closely correlated, right? Even if you look at the daily time frame, it seems like the downtrend is still very much intact, right? And what we are looking for then is technical wise opportunities to sell into the market, all right? But we expect a cipher pattern, but we are seeing price still challenging a new low. Right, so high chances that this cipher pattern will not eventually be validated. Right, so just wait for price to decide to give us more clue as to how we can enter on a technical basis. Right, but of course, if you have your own technical strategies, all right, feel free to use it. My analysis on oil is still intact, the downtrend. All right, in terms of daily, even H4, H1 is I'm seeing all towards a downtrend. Okay, structural level is over here. So if it retraces back towards maybe the 44.5, higher time frame wise, it's also showing that 44.5 was a previous support, right? If it retraces back up towards this level, it might test it as a resistance, right? Basic structure trading. Let me pull in my Fibonacci tool to see if there's any confluence. Right, there might be a 32.8, 38.2 Fibonacci confluence. Again, we don't trade the 38.2. Okay, so we won't take this trade, but what we do is if price continue falling further, we might eventually trade it if, let's say, it retraces back to, it dropped further enough such that this level becomes at least 50 or 61.8 Fibonacci, then we might enter on that. Okay, as of now, for us, no setup on oil. Okay, just to share with you my take on it itself. Okay, before we go on to the next pair, next portfolios, all right, any question regarding this? Any question regarding what we went through over here today that you'd like me to explain further, or even, if you want to clarify anything that we have went through? All good? Yeah, assume no question. For those who are day trading, all right, I would like to just share with you that let me just clear this. Okay, the strategies that we teach you in terms of technical wise can be applied throughout all time frame, all right? So even over here, you can see that euro dollar on 15-minute, okay, there's a divergence forming, all right? You can see price prints lower low, all right? RSI prints a higher high, higher low, okay? And the neckline has been broken, okay? Over here, price has broken the neckline. So, even if you want to do it, this is a counter trend. Pulling Fibonacci, waiting for the 61.8 over here. All right, so should price comes and retrace back towards this level, right? Then you can take a trade, expecting it to go higher. All right, but this is again, if you trade this is a counter trend based on fundamental direction as well. But I'm not saying that if you do this, you lose this trade, we end up a losing trade. But the chances when you have fundamental supported with sentiment, with technical, then it becomes even stronger. Right, but things like this you can start to build up. For example, just now we identified that there's a sharp pattern, all right, at the 88.6. I know some of you likes to trade the C point of patterns, meaning you see a completion of C point, you want to enter at the C point and then trade all the way to the D point of the pattern itself. You can actually do that, all right, but do have a very proper plan as to decide how you want to trade the C point, right? So for example, like this, if you have a you have a smaller time frame kind of setup, right? A valid technical setup. You can actually enter based on this and then trade all the way to the completion of D point. All right, but of course, this is based on you have a valid setup, all right? Not just looking at C or C point has formed and then you straight away enter. You need to use a proper plan to trade your C point as well, right? So this is a classic example that since I spotted it, I would like to just share with you. Okay, if those who wants to trade C-Leg, you can actually drop to a lower time frame, identify there's a technical setup, all right? Trade this C all the way to the completion of D. All right, so if this trade successfully ride out, you can actually ride out about 170 pips on this C to D leg. Okay, but this doesn't happen all the time, right? So for example, even if you look at pound, you don't really have that kind of setup. Okay, but if you drop into lower time frame, you might see a cipher pattern. All right, yeah. So we have a cipher pattern over here. So if I clear the charts, okay. Cipher pattern is from here to here. Okay, so if I draw, the level is at 786. Okay, X to A to B, B to C, C to D. Okay, so again, I'm able to do this fast because I've been looking at charts for some time. Those of you who just started might take some time to eventually, able to do this, but continue practice because one day you'll be able to hit it. All right, and if I couple this with just now I identified a bad pattern, right, on higher time frame, right, completing at the 88. Again, if you want to trade X to A to B, B to C, if you want to trade a C leg, right, you need to go to lower time frame, identify a potential and a valid technical setup. Okay, you can trade from C leg to D leg. Okay, so similarly on pound dollar, if you trade the C to D leg successfully, that's about 330 pips. Okay, but again, this is a counter trend because you're actually buying pound, which I'm not saying that, again, it's not that you won't be profitable, just that the chances of it might not be as high because you're actually going against the fundamental direction as well. Okay, so I think this two example on euro dollar trading the CD leg and then pound dollar trading the CD leg might be something that educational to you guys, all right? Especially those who are more experienced in trading and would like to trade the CD legs of advanced pattern, right? And for those who are day trading, you can see how patterns are also formed on smaller time frame like M15, right? Patterns are formed on M15. Even divergence setup, right? It's formed on M15. Okay, so if I continue scrolling, you might spot quite a few patterns even on smaller time frame, right? For example, if this one I want to look into it, this one do not have, right? But if you trade this, let me check if this is valid. Yes, right. We have a bullish cipher pattern over here. Okay, bullish cipher pattern ends at 786. If you draw in the triangle, it looks like this. Right, and then again, if you go to a higher time frame, look at the H4, right? You can trade this, right? If it comes down, you trade the counter trend towards a higher completion level. Okay, so there are many opportunities for you to trade in the market. So even if you're day traders, all right, you go to 15-minute every day, you spot certain setups like this. All right, so with me just going, scrolling in like this, you'll be able to spot a lot of opportunities. All right, let me just do a quick measurement of this. This is not valid. All right, just to show you, Aussie dollar, you have setups coming in. Pound dollar, you have setups coming in. Even euro dollar, you have setups coming in. All right, any question? Right. Okay, John asks, can the divergence setup be used for any time frame other than H1 and H4? Yes, you can. I think Lester also. Okay, yeah, Lester answered that. Yes, you can do that. Okay, so basically, all the technical strategies that we share with you is applicable to any time frame, right? But just you need to take note that if you're doing on lower time frame, the frequency of trades will be higher. meaning you actually experience more winning trade. At the same time, you need to also understand that because you take more trades, the frequency is higher. You might experience more losing trade as well. So the key here is you need to be consistent. That means if you want to do day trading, that means every time you trade is 15 minutes. You need to be at least consistent in the time that you trade. Meaning, you cannot like this week I decide to trade on Tuesday and Wednesday, and then next week I decide to totally not trade, and then the following week I decide to trade on Wednesday and Thursday. Okay, this is not consistent, and then your result wouldn't be very reflective of the strategy itself. Okay, so if you do day trading, the important thing is you need to just trade consistently. Okay, any other questions regarding this? If not, I'll go over to the other to the other portfolio to share with you some of the other charts. Okay. Yes, John, daily also can. All right, again, it's applicable to any time frame. Yes, can. 2618 can also apply on daily. Okay, so it's on any time frame. Okay, so let's take a look what we have over here. Okay, dollar franc, not much. But for those who wants to trade bet pattern, depending on your strategy and your rule, right? If you take bet pattern is at B point. Okay, if your B point you take it as 38.2 retracement is fine. You do have a bullish bet happening over here. All right, X to A to B, B to C, and then C to D, completion at 88.6. So you do have a bet pattern over here as well. All right, for those who takes in 38.2 as your B point as valid, you can actually trade this bet pattern. And if I go higher time frame, you can see that in terms of structure, it's not really clear. All right, but what we are riding on for this bullish pattern is, in terms of fundamental, is together with the dollar strength, right? So there's still much room for it to drop. Current price is here. For it to complete this pattern is another 80 pips. Highly probable to be triggered in this week itself, right? Again, depending on how market develop. All right, you can see CAD is still very weak because of oil market. Okay, there's no setup over here, right? You see markets are very choppy, so it's not a very clean chart for you to trade. So it's slightly tougher. All right, so you can see, CAD is really weakening right now because of oil market. So sometimes when you trade currencies, you need to understand the correlation between certain currencies and certain commodities. All right, even fundamental of CAD is strong, is bullish, but because of oil market, you can see CAD is really weakening. Okay, Aussie franc, based on the charts and the strategy trading plan that we are using, currently there's no setup over here. Okay, if I drop into lower time frame, all right, quite a bit of bullish pattern. There's a bullish sharp pattern. All right, let me just quickly do a quick measurement and then show you how it looks like. All right, again, it ends at 886. Okay, but sharp pattern, the range is actually from 886 to 113. All right, if I go to higher time frame, you can see this completion is pretty nice in terms of technical level. It's at the previous structure support, right? 1 time, 2 time, 3 time, 4 time. All right, but again, if you're trading, if you're buying Aussie, you're going against the fundamental trend. All right, so this pattern, you can keep an eye on for those who are day trading. Kiwi franc, okay, we are looking for short opportunities for Kiwi franc. We have a divergence. This prints a higher high, but RSI prints a lower high. All right, again, we are waiting for that 61.8 retracement. That's where we look for short opportunities. All right, around the 0.7085. Okay, let's see if lower time frame we have anything. All right, nothing much on the lower time frame. So that's basically the one that you are looking for, that we are looking for, right, on 61.8 retracement at 0.7085. Aussie Kiwi is a tricky one. All right, because if you look at the fundamental, Aussie and Kiwi, it both cut rate, again, there's no clear direction. But if you look at technical, Okay, there's a false break below over here, and then after that it rallied all the way. And if you draw in the Fibonacci, you can see 50% Fibonacci level comes in very nicely with this structure support, resistance, resistance, resistance. All right, and then if you come back down, we do expect it to act as a support. So this level of 1.054 might be a key level to look out for. But again, if you align with fundamental, it might best to just skip this pair because we never know what's going to happen on Aussie Kiwi. Again, Aussie, if it cuts rate, it might fall more than this, all right? Because fundamental really moves the currency market. You want to take note of that. Okay, so this is basically for the pair. If you drop into lower time frame on 30 minutes, okay, you can see there's a potential bullish pattern over here. You can see X to A to B coming in at 61.8. We do have a potential bullish Gartley pattern. All right, it will complete somewhere around here. Let me check. 127, yeah, somewhere around that level. Okay, so if I zoom back out to H4 time frame, just remove this. You can see this is a bullish, potential bullish Gartley pattern. All right, the completion level is pretty nice in a way that price is currently trading in this range. All right, so if you trade this pattern, you're actually expecting that price will continue remain in this range. Okay, so another potential setup for you to look out for. Personally, I won't be trading this pair. Right, I won't be trading Aussie Kiwi. Again, it's because of CPI from Aussie coming in on Wednesday, and then next week we have RBA. So best is not to trade this lah. Right, but for those who would like to be more aggressive, this is also a potential setup that you can take note of. All right, Swiss franc, Japanese yen, again divergence setup. Waiting for 61.8 retracement, but we won't be trading this pair because again, I don't really like to trade the Swiss franc, right? But it's a valid technical setup, all right? Double top, double bottom. It broke neckline, waiting for retracement back to the 104.7 level. All right, so this is a potential setup. EuroCAD, nothing much, all right? You can see price is pretty much chopping around as well. Currently in a very wide range. All right, what it's doing now is in a range environment. All right, the high is over here and then the low is over here. Nothing much for this particular pair. Kiwi CAD. All right, this is interesting because we have two setups. On higher time frame, we have a double top. All right, double top, and then you can see RSI is divergent. Okay, it prints a lower high. So the first setup over here is on higher time frame H4. We are waiting for a 61.8 retracement, all right, for this double top divergence. Okay, and if you go into lower time frame, we have another setup as well. It's a very sharp pattern, all right, completing at the 88.6. So it's pretty close to our entry right now. Price is trading at 0.922. Our entry is at 925. All right, so it's about 30 pips away from it. All right, this rally up in terms of Kiwi CAD, you need to be cautious because this pair is currently moving up because of weakness of Canadian. And this weakness again come from the oil market. So you need to pay attention as to this. All right, and the idea of this, the reason or the thesis of this trade itself is riding on the weakness of Aussie. Meaning, if Wednesday CPI comes in negative, we do expect New Zealand to experience some bearishness as well. All right, pound CAD again. If you go on higher time frame, there's nothing much because what it's doing currently is ranging in this environment. Okay, so again, if you are interested, you can trade breakout strategy. But for this week itself, there's no major news on pound and CAD. All right, so nothing much on this particular pair. All right, indices itself, for those who are trading DAX, we have a bearish bad pattern completed. Right, but we don't trade the index. All right, so just to share with you that there's a bearish bad pattern completed at this German DAX. Okay, again, equities market are all now rallying, so you might not want to short on this as of now, right? Even S&P is currently experiencing all-time high, right? Currently is in this range. Again, we don't trade equities, but we are using it to track as to how the market is moving. Okay, so equities are all rallying, so best is not to short all this. Okay, technical wise, we do have a divergence forming. Over here you can see it's forming new highs, but your RSI is forming new low. Okay, for those who are interested in trading S&P, USD Sing, we are bullish on dollar. Okay, so over here we do have a potential sharp pattern. All right, completion is very nice as well in terms of technical level because it completes near the previous structural level. All right, over here you can see support, support, support. So if price really comes back down over here, you look for a very nice opportunity to long the market. All right, but again, from where current price to where we are looking to enter is about another 170 pips. It's still some way down. Right, but for those again who are interested, to again trade the C point to the D point, you might want to go to smaller time frame to look for opportunities. All right, so very simple opportunities over here. We do have one bearish butterfly. Let me just clear everything. Okay, let me walk you through simple technical analysis first. All right, you can see currently it's actually consolidating in a very nice symmetrical triangle. Again, for those who wants to trade the C leg, right, from here down to the D leg, you need another reason to enter, and not just because it's C point then you enter. So like you can have simple technical strategies like this because now it's in the symmetrical triangle. If price breaks below, all right, and then you enter the short side trading from C point to D point, right? So this is a simple symmetrical kind of triangle. And for those who are trading patterns, all right, you do have a potential butterfly setup as well because X to A, A to B, B point retrace up to 786. That gives you a butterfly pattern completion at the 127. Right, so for those who are trading patterns, you have another opportunity to sell when price comes up to the 127. If I go back to higher time frame, right, your sharp pattern, how it looks like is like this, right? So it's completing at the 88.6. All right, so you can actually trade this, meaning price rally back up towards the completion of the butterfly. You can actually enter and look for opportunity to short and write it down. Again, that's one. This little butterfly pattern over here is a counter trend in terms of fundamental because dollar is very strong. All right, so any other questions? All right, so basically walk you through some of the pairs, all of the pairs in our portfolio today, and then I think the main focus for today is I actually share with you how you can actually go to smaller time frame and even trade it. All right, so for those who are day trading, all right, there are plenty of opportunities you can take from the market as well. The key over here is need to follow your plan. All right, always follow your plan. So that's the most important thing. All right, and of course, manage your risk because you wouldn't want to risk everything in one trade itself, and then after that your account is gone. All right, any questions, or Lester, you have anything you want to share with the group? Okay, let me pass your screen to you. Yeah, can see. But I can't hear you though. You want to unmute your microphone, then I think then can hear.
Now?
Yeah, can.
Okay. Okay, nothing much for me. I'm just going to share two things. So for the dollar index, we actually have a harmonic pattern over here.
Oh, okay.
All right. So just take note of that because the market is currently pricing in increasing chances of a rate hike, but that sentiment may change and usually does revert back to about 50% chance of a rate hike whenever the rate announcement nears. All right. So for traders who are looking to trade short-term sentiment, if you do see a shift in dollar strength, all right, from strength to weakness as the FOMC as the rates announcement nears, then you may want to take a short trade. All right, of course, this is only in the short term, all right, when there's sentiment, and don't do it during or after the announcement. All right, you want to do this while the market is reverting back to a 50-50 chance. All right, usually for big rates related news like this, you can see how the market is pricing in things. So you can see that there's this nice uptrend here in the XY, right? So, and then you see the media, increasingly talking about higher chances of a rate hike, right? Or, the market is looking at it. Okay, so with this primer, with the news articles on hand, right, you will know that market is currently pricing in a rate hike, right? So how would you want to trade this plan, right? Your trading should be something like this, right? If I see confirmation at the pattern completion area that there could be some change in sentiment, and then maybe you see in the news articles, the recent news articles that sentiment is it's starting to change. All right, traders are maybe not really expecting a rate hike or not strongly expecting a rate hike. Maybe as the announcement nears, or you see articles saying something like, traders reduce their dollar bets or reduce their dollar exposure as the rate announcement nears, then that could be a good indicator of when you want to do a short position on it. Of course, probably a short-term one, right? Up until the announcement. Okay, the second thing I want to share is the importance of adding comments, all right, to your trades. So here you can see, I always, from now on, I usually try to comment out my trades. This is very good because it tells me things like, what are the setups that I use, all right? And then from there, okay, when I do my journal, okay, the comments are very easily available here, right? So things like, your market orders, retracement trades, structure trades, okay, the position sizing is not very accurate because it's just a demo account, so I'm just testing out stuff, right? You can see how actually, having all these comments actually makes it clearer when you're analyzing your trades. All right, so for let us take a look at the comments here. All right, for comments that have this thing here, bracket TP or bracket SL, all right, it means that your trade was actually, you actually hit the target price or stop loss. All right, for comments that do not have anything but just the original comment, so it doesn't have the TP or SL icon, it actually means you manually close the trade, right? So you can see, test, all right, this one naturally hit the stop loss, right? This one I close manually, right? These few trades I actually close manually, right? Because it doesn't have the SL or TP, icon beside it, right? So by doing this, and then, when you download your history, you can actually take a look at what are the trades that actually worked out for you. In fact, you don't even have to put into Excel. You can actually just view it here. All right. Whether you hit TP or whether you close it manually, it can all be viewed here. All right. So taking it further, all right, let's just take a look at the market signal strategy. All right. So basically, I use this command whenever I enter market orders. Okay. You can then try to sum up for each currency pair what are your profits and what are your losses. All right, and then you can do a net profit kind of analysis to see from the trading session, the trading period, maybe for this week, how did you perform, right? So you can see here, your net profit very positive, all right, but pound Aussie stands out as negative. It stands out because it's one of the currency pairs with a loss, right? So you may want to look into your past trades on this currency pair to see what went wrong. Okay, is it because you broke your rules? Is it because your entry wasn't well timed, or is it just a natural stop loss? All right. So just wanted to share the importance of placing comments on your trades, all right, as it actually makes things clearer for those of you who do not want to journal down your trades, all right, or you're too lazy to actually write down everything in a spreadsheet or in a journal. You can actually use this method, and then once you are maybe after a week or so, you can just download the history and then print it out, and then take a look at it. All right. For those of you who prefer, not you all don't want to key in, every trade for every time you place a trade, you don't want to key in that, right? So just maybe if you don't want to do that, just take in the time to at least fill in the comment section. So you can actually do that by when you place a trade, right? You have to go through the new order function. So let's say, not sure if I can trade this, all right? I might just put a new order here. All right, there's actually a comment window here that you can write in. All right. Of course, I can't trade the dollar index here, but if I were to do something else on a different currency pair, right, I can just key the comments in here, right? And then once you key in the trade, right, you will be able to see the comments right here, right? So just this one, harmonics, right? Of course, it's not actually harmonics, but just to show you an example. All right. So whenever once this trade is actually closed, you can print out the history. All right, and then it will be reflected here, okay, in the comment section. So maybe you guys may want to try this, all right, as an alternative to, let's say, keying in everything in the journal. This could be a faster method for you guys who do take more frequent trades as compared to, let's say, Kayong, who uses mainly pending orders, so there's no more time for him to key in everything, right? But try to have the discipline to comment out your trades, or at least write down what is the strategy that you use for that particular trade if you are using multiple setups for your trade. Yeah, any questions? If not, I'll pass the time back to Kayong.
Okay, you guys got any other questions you want to clarify? Okay.
Yes.
No, right? Okay. I guess then okay, if not, then just be aware of what's happening in this week, right? Basically there'll be one event on Wednesday, which is your Aussie CPI coming out at 9:30. Just be aware of that. Followed by Thursday 2 a.m. you have FOMC right, and then of course on Friday you have BOJ. So these are the few things you guys need to be aware of what's happening. So just be more aware of the positions that you are running as well if you are trading on all this currency pair. All right, so other than that, nothing much. If not, then we can end this session.
Okay.
Yeah. Okay, Ken. Other than that, then we end this session. Then for those who have any questions, we'll be at CMC tomorrow, 7 p.m. to 9 p.m. All right. So if you want to ask any questions or you want to just listen to us share the market again, feel free to drop by CMC tomorrow at 7 p.m. And if not, okay, let me pull out my calendar. Okay, if not, right, I'm actually looking to see if you guys are free on 12th. Yeah, free on 12th August. We're actually planning about a community meetup. Yeah, that's what John asked. All right, 12th of August. So see if you guys are free. We can meet up for dinner. All right. Basically, it's a very casual kind of meetup lah. So we can talk about trades. We can talk about any other things. All right, so let me know if you guys can make it on 12th of August. If can, we'll fix on the date. If most of you cannot make it, then we'll change it to another date. All right, but as of now, we're putting it at 12th of August. All right, so let me know on that aspect. And for those who like to revise on your technical analysis, we do have a TA masterclass coming on 6th of August. the masterclass will be 10 a.m. to 6 p.m. It's a full day workshop. So if you are free on that day and you'd like to revise in terms of the technical, we'll be sharing on structures, sharing on divergence, sharing on advanced pattern as well. So if you are free on that day, let us know if you want to join, so we can also accommodate some space for you guys. All right, so that's about it for this today's webinar. All right, anything again, feel free to ask me through WhatsApp or even Facebook. All right, so I'll see you guys again next week. Okay, see you. Bye bye.